ourselves, but I'm Allison and this is Dawn. We are Blue's member development officers. So I primarily focus in kind of the Colorado Southern region, really anything that's going to be about Castle Rock South. She focuses more in the Northern region. So really Denver North, in a little bit of Wyoming kind of as needed. As well. So anyways, today we are going to cover home equity lines and some of their structures as well as their benefits. So first and foremost, what is a home equity line of credit? This is going to be a revolving line that's secured by your home's equity. So similar to a credit card structure, you will have a total limit that you have access to, and you're able to use as much or as little of those funds during the draw period. With that, again, structures very similarly to a credit card. So you're able to borrow whatever amount you'd like, repay on that amount, and then draw again over that draw term. Typically, you do find that there's significantly lower interest rates, especially compared to your personal loans and your credit cards. As of right now, we're seeing the home equity line starting at about 6.5%, between about 6.5 to 7.5, compared to those personal loans and credit cards that are between, anywhere from about 15 to, we'll say, almost 30% in some cases. That can be significant savings.
Exactly. So to reiterate on that, there's a lot of flexible access to the funds. You can draw on them for the first 10 years, accessing it through transferring it to your Blue membership account, going into one of the branches and getting a cashier's check. There's multiple uses for a HELOC. A lot of folks do home improvement, say you want to remodel a bathroom, do a basement, some landscaping. And as Allison mentioned, do some debt consolidation on those high interest credit cards or even paying off an auto loan. I've had clients use it for emergency funds as well. Like what if I burst a pipe and I need to get my plumbing on my house fixed up? You don't pay on it until you use it. So it's there as an emergency. If you never use it, you never pay on it. A lot of clients also will finance their kids' college funds this way too. So it can be used for many, many different uses.
Absolutely. So I already kind of hit on the lower rates. A number of people, as Dawn mentioned, utilize them to consolidate some of their debt. The interest-only payments give a lot of flexibility. So during your draw period, which for Blue is going to be a 10-year period, the minimum payment each month is going to be interest only based off of whatever your principal balance is at that time. So that number can fluctuate month to month. To clarify, you can pay toward that principal balance to pay it down. It doesn't just have to be interest only payments, but sometimes you have a little bit tighter months or you'd like to invest funds in a different direction. So those interest only payments can help a lot. We also advise chatting with whether it's a financial advisor or your CPA, getting a better understanding of what your tax options might be. Home equity lines do offer a number of different deductions and possibly some benefits when filing. So we definitely suggest checking in with your advisors.
For sure. So again, touching on the what can I use my HELOC for? A lot of folks will get their house ready to put it on the market. For example, they need to do some new carpet or paint. Potential value increases are incredible. Most all of you probably are married to that 3% first mortgage rate. So refinancing that's doesn't really look so nice these days. So we can consolidate those higher interest credit cards, higher interest car loans, and put it into a home equity line of credit. It can also help covering temporary cash flows. Like I said, if you had never used your line of credit and God forbid you lost your job or somebody got laid off, you can tap into those funds just like it's a savings account. I also have seen a lot of folks use the HELOC instead of dipping into their 401k or their Fidelity investment, Schwab investment accounts. When the market's low, you want to keep the money in there so you're not going to lose money. Taking it out of your investments can also be, it can cost you some taxes as well. So this is another idea to use that HELOC instead of tapping into your financial investments.
Absolutely. So there are some frequent questions that we tend to get. First and foremost, is there an annual fee or are there any prepayment penalties? So we do not have any annual fees or costs associated with the home equity line. As far as prepayment penalties, we do not have any of those either. So as I mentioned, you can always pay in advance or pay in addition to get that principal balance down during the life of the loan. Now, are there any costs associated? So there are a few costs that are tied to closing. So the owner and encumbrance report, or O&E, is going to verify whether or not there are any liens on the property that we may not be aware of. We have a flood certificate, which confirms whether or not the property is within a flood zone. And then also possible inspection or a full appraisal may be required. So for the inspection and appraisal, we typically know that at the beginning of the process. When we initially send things over to underwriting, they're going to come back and let us know whether or not that's going to be a requirement or a stipulation, whether or not it will need to be a full appraisal, or if we're able to go the avenue of an inspection. So those are figures that we know pretty early on. The inspection and appraisal are an out-of-pocket cost. So that is paid at the time that they're scheduled. And closing time frame really depends on whether or not that appraisal is going to be required. So if not, we typically quote anywhere between about 2 to 4 weeks. If an appraisal is required, we bump it out a little bit to about 4 to 6 weeks. Again, it could potentially be sooner, but it depends on appraisers' availability and how quickly they get that report back to us. And then finally, one of the big questions is, well, how much am I able to take out? So Blue allows us to go up to 85% loan to value. So essentially, we're going to take the value of your property, multiply that by the 85%, and then deduct the first mortgage that you hold on your property. And that difference is typically what we're able to go up to. Now, there can be some variables as far as that affordability or debt to income ratios. We do want to make sure that it's still within our debt to income stipulations, which typically they ideally would like to see under about 45%. And of course, once an application is submitted, we'll get some more official numbers and be able to give you an idea of where things are.
So in summary, and some key takeaways for you guys is that, yes, a HELOC is a great product that will provide you flexible access to the equity in your home to save you potential high interest rate costs otherwise, to plan for emergencies, financial management, and get away from using those credit cards, right? Those credit card interest rates are just, it's crazy. The HELOC is a variable interest rate. It's tied to prime rate, which is currently at 6.75. And the rate will fluctuate. When prime goes up, your rate will go up. When prime goes down, your rate will go down. We also have fixed home equity loans as well. And that would be something based off our individual assessment and conversation with you about what you're looking to do. We can go over the differences. Like perhaps you would like a fixed rate, or no, Dawn, I like the interest only payment. That really gives me a budget that I can live with. Either way, tapping into your home equity is a powerful tool, and we have excellent products that can help you do that. And